If you're getting ready for a finance or FP&A interview, one question you are almost guaranteed to get is, can you walk me through your company's balance sheet? And this is your chance to show that you are not just reporting numbers. What they really want is somebody who can explain what those numbers actually mean for the business. Before we dive into this topic, if you're finding this videos helpful, hit that subscribe button. It helps the channel grow, and let's just bring in more expert guests and real world examples to help you in your finance and FP&A careers. Now, this question might not always come in the interview in the exact same words. So, let me show you a few different ways the interviewers might ask this question. Can you explain your company's balance sheet structure? Tell me about your company's assets and liabilities. What does your balance sheet say about your company's financial health? How do working capital and leverage impact your business model? What are the most important balance sheet metrics you track and why? So, why do interviewers ask this question? They are not just looking for textbook answers. They want to see how well you understand your company's financials. They are not testing your memory. They're testing, can you connect the numbers to real business activities? Do you understand how your company manages its resources and obligations? And are you fluent in concepts like liquidity, leverage, capital allocation? And most importantly, can you connect them to real business decisions? And to show them that you understand the balance sheet, you need to walk them through the entire balance sheet in a clear, structured way, just like how a real business thinks about its obligations and resources. So let's break down the balance sheet step by step using a simple example. So first, let's talk about the asset side of the balance sheet, which is what the company actually owns. On the asset side, you have the current assets and the non-current assets. Current assets are assets that are expected to be converted to cash within one financial year. Cash is the most fluid liquid asset. Accounts receivable is the money we are yet to collect from our customers. Inventory are the products that we have made or bought to sell in the future. And prepaid expenses, these are things like rent or insurance we have already paid for. Then you have your non-current assets. Non-current assets are your long-term resources used in the business, like plant, property, and equipment, which could be machinery, buildings, or other physical assets. Then you have the other non-current assets, which could be things like patents, long-term investments, or goodwill. Next, let's move to the liabilities and equity side of the company. This is how the companies are funding those assets. First is equity. This is what the owners have invested or retained as equity or retained earnings and reserves, which shows how much of the business is funded by internal sources. Let's move to the liabilities. This is what the company owes others, which could be debt, which are long term loans, or it could be bonds. It could be current liabilities like bills, payables, or other obligations which are due within the next financial year. Other liabilities could include things like deferred tax liabilities or lease obligations. On a quick side note, if you are very serious about your career in FP&A, do check our Certified Global FP&A Professional Program. CGFPA is a 6-month in-depth FP&A certification designed to help you become real business partners. If that sounds like something you are interested in, the links are in the description. So now that we've understood the balance sheet format and its different components, now let's look at some industry specific examples of how you could add more color to this answer. Here is how you might explain the balance sheet if you're working at a SaaS company. We are a SaaS company, so our balance sheet reflects a low asset, high margin model. Our major current assets are cash and receivables from annual contracts. On the liability side, we carry deferred revenue as our customers prepay us for our software licenses. We don't rely much on debt, and most of our growth is funded through equity, especially for research and development. So that's what a balance sheet might look like in a tech or a subscription based business. Now let's see how it plays out in a more inventory heavy setup like a FMCG industry. As a FMCG company, inventory and receivables make up a large part of our current assets. On the liability side, we manage a high volume of payables to suppliers and distributors. Working capital efficiency is critical for us, and we aim to shorten our receivables and stretch payables without hurting vendor relationships. We also carry long term loans for capacity expansion and machinery. Consumer goods companies focus heavily on inventory and working capital. But if you are in financial services like a bank, the balance sheet looks completely different. Let's take a look. As a bank, our balance sheet is asset heavy. with most assets being the loans disbursed. Our liabilities mainly include the customer deposits and borrowings from other banks. The capital adequacy and provisioning are our key financial metrics. Equity strength ensures that we meet our regulatory ratios and withstand the credit risk cycles. So, now that you've seen how balance sheets look across different industries, you might be wondering where can you find some more examples that you can practice with. So here is a quick tip. What you have to do is you have to go to Google search and the keyword, the company name along with investor relations. This will get you to the investor relations section of the company's website. You can download the latest financial statements or the earnings reports and move to the financial statement sections where you will find the detailed balance sheet along with the notes that explain each item. If you want to sharpen your interview skills, hit the like and subscribe button. And don't forget to check out the full FP&A interview prep playlist, free courses, and our CGFPA 6-month certification. Links are in the description below. Thank you for watching, and I will see you in the next video.